Hi, this is Ken Boyd, and this is Understanding Stocks and Bonds. This is an important area for personal finance because stocks and bonds are the typical investment that most people invest in personally to plan for retirement. So as a starting point, it's important to know stocks and bonds also because stocks and bonds are the two major ways that companies raise money to run their businesses. So let's go through both examples here on a very basic level. First of all, bonds. Now, bonds are referred to as debt instruments. Now, you've probably borrowed money for either buying a house or a car. So let's say, for example, that you borrowed $20,000 to buy a car. Your interest rate is 6%, and the car loan, I should say in this case, is due in 5 years. So $20,000 times 6% means you pay $1,200 a year in interest payments. And in 5 years, you're going to pay back the original investment amount, or $20,000. Now, most of you realize that with car loans, you may be paying down some of the principal or the original amount borrowed each year, but let's keep it simple and say that you only pay that amount at the end of the 5 years because it compares well with the bond example. So if you understand the basic car loan, we can move on to something called a corporate bond. Bonds issued by corporations are called corporate bonds. So let's say that Sally is starting a restaurant and she needs to raise $500,000, and she decides that she's going to issue a corporate bond issued by her corporation to raise money for her restaurant. Sally gets $500,000 in the door from investors who are creditors, and the creditors receive two flows of payments. One flow is interest on the $500,000 each year. Let's say that interest is $500,000 or 6%. So one inflow that the investor is going to get is $30,000 or $500,000 times 6% each year that the bond is outstanding. At the end, the investor is going to get the $500,000, what we call principal amount, returned to them. So those are the two flows, the interest payments and the repayment of principal. So that's one way that Sally can raise money to run her business, is through issuing a bond. Now, the risk to you as an investor is that the bond isn't repaid or that interest payments are missed. Both of those things might happen if Sally is not able to generate sufficient sales and profits from a restaurant. So that's an overview of what a bond is. Now let's talk about stock. Another way that Sally can raise money to run her business is by issuing stock. Stock is referred to as equity or ownership. So there's two ways you can benefit from owning stock as an investor. One way is that the price of the stock increases because Sally is able to generate increasing sales and increasing earnings or profits so that people in the marketplace feel that Sally's stock is now more valuable. And so they're willing to pay more than your original cost for the stock. In that case, you would have a gain. The difference between what you're able to sell the stock for and the original cost of the stock. So you can sell stock for a gain. That's one way to benefit. Another way to benefit is by earning dividends. Dividends are a share of the earnings that Sally's restaurant generates that Sally decides to pay out to shareholders. So you benefit by getting dividends, a share of earnings every year. You may or may not decide to sell the stock for a gain. Now, one more thing on bonds and stocks is that how long you hold these investments also plays in. Most investors on a basic level hold a bond until maturity. That is, they'll hold it until the maturity date, 5 years or 10 years, and they don't sell it before that date. With stock, in theory, you can hang on to the stock forever. There is no expiration or maturity date. And when you sell the stock, you may have a gain, but you may decide not to ever sell the stock and just hang on to it. And as the stock price grows up, you have a bigger and bigger gain. But until you sell the stock, there is no tax consequence on recognizing that gain and paying taxes on it. So many people buy stocks and own them for dozens of years and decades. That's an overview of understanding stocks and bonds as an investment for your own personal retirement. Thanks very much for watching.